Welcome to another edition of The Real Money Show. My name is Jerry Karaya. I'm joined with my colleague, Jeremy Wiseman. Jeremy, how are you doing today?
I am good. I am at home, just a little under the weather, but I'm always excited to talk about the market because it's been a pretty good week.
It's been a great week, chock full of news, a lot of things happening in the market, and we're going to go over a lot of news that came out this week. We have a lot of technicals to talk about, a lot of pricing, action going on in the gold and silver market, the Bank of Canada as well, a lot of news coming out of central banks into next week as well, and a lot of headlines coming out of Russia and the oil peg and central banks. Just a lot of losses. Jeremy, what's going on?
Yeah, I think the two biggest stories that we're going to get into today, one comes from Zoltan Pozsar. He's a writer for Credit Suisse, which I believe they're not doing so well. I think they've got like billions in losses. But he's talking about, gold potentially going to $3,600 very quickly. The other is a story that's been developing, something that you've followed very closely for all of our listeners, provided the information, and that's about the Federal Reserve and how are they doing. We know that as interest rates were rising, that they were going to get into trouble in terms of taking on losses, and that's going to be something that we discuss as well. But first, as far as the week has been concerned, silver's is heading for another strong close. Last week, we were looking at a close of silver in and around $22.27. Today, we're recording at the price is at $23.60, so we're up 6%. U.S. Gold in U.S. dollars, we saw a close last week in just above 1750 in the 1765 range. As we close out the week, we're looking at a close closer to $1,800, so gold's up 2%. Mm-hmm. And then in Canadian dollars, it's looking really, really good. Silver's up 6.5% over the past week. Gold's up 2.5%. This is nothing new as far as all of the global currencies are concerned. It's gold and silver are positive in almost every currency except the U.S. dollar, which is part of that overall arching theme of, if you're going to raise interest rates all year, you're going to bring some strength to the U.S. dollar. But even in U.S. terms, I think silver's down something like 0.5% on the year, so we're basically even on the year, and gold is not far down. So in what has kind of looked like a topsy-turvy year for the precious metals, I would say, there's a part of me that wants to say that we kind of lost the battle but not the war. Right. But I don't think we've really lost the battle here, Jerry. To end up close to even on the year, and the year's not done yet, in a year where central banks are raising interest rates all throughout the year, it seems that the demand on gold and silver has been pretty strong, and many people have been ignoring the narrative of rising interest rates. What do you think?
Right, exactly. You hit the nail right on the head. As far as when we value gold and silver, we have to look at how they performed versus a basket of all of the currencies. And for us in Canada, we have also seen the Bank of Canada raise interest rates. They raised it this week 50 basis points. And it was, you normally would think that the currency would appreciate after a rate hike. But because of the dovish statement after that followed the Bank of Canada's 50 basis point hike, the Bank of Canada delivered a very dovish policy rate this week, and pretty much finalized. They also signaled that they would not rule out a final 25 basis points, so a very measly 25 basis point hike in January. And they concluded that the bank is very close to ending its tightening cycle. So that would be it. They're going to just close the door on interest rate hikes. And that right there is the reason why the loonie did not appreciate after a hawkish move of raising interest rates. The loonie just fell off. It's continuing to dwindle. And in Canadian dollars, silver's up about 6.6% over the week, higher than the U.S. price. And it's doing its job. You mentioned the battle. The battle is a war of defending yourself against depreciating currencies. The currencies are being devalued because of the massive massive money in the currency pumping for us from our central banks, and as a result, we're just seeing our currencies and our purchasing power being decimated. But if you look back, I looked back at a few invoices, Jeremy, over the past few months, and for those clients who bought in, let's say, around June, July, although the price of gold and silver didn't move much in US dollars, what had happened was the loonie really fell off the table, down about 8-9%. So it's doing its job of defending your purchasing power. And that's the first and foremost, the foundation of setting up a portfolio, is creating a foundation that is going to weather that storm of currency devaluation, which is stealthy, but stealthy no more. We're all seeing the prices rise.
You know, what's interesting is adding to the fact that central banks have created a whole bunch of currency out of nowhere. You also had government spending that is completely unchecked. There was a report this week from the Auditor General that something like, I forget what the number was, but it was something like $100 billion has gone missing in all sorts of different CERB payments, that were going to, people in jail or people that had passed,
Right.
all sorts of things that they can't account for it. And, they kind of prepped it at the time. They said, look, we're just going to send out the money. We know that some people that, we're going to have to find out where the money went later. But who knew that where that money was going to be lost was going to be in the billions?
Mm-hmm.
And add to that the debt in Canada is now over $1 trillion, and that every single Canadian listening to this show owes $27,000.
Wow.
You kind of want to sit there and say, I think I want to have some physical gold and silver, and when that gets revalued, I can certainly know that I've covered my portion. But this government spending's out of control. Turning to the central banks, which on the whole have continued to buy gold and silver throughout the year. I know India has been a huge buyer of silver throughout the year. Not only has central banks been buying precious metals, but you also have them raising interest rates, trying to save some sort of credit on the dollar. What do you think? Has that worked? That's sort of the narrative of this year. Last year was, we have inflation, but it's temporary. This year, we're going to fight that inflation because we know it actually exists. Did they do it? Is that what they're trying to say at the end of the year here? That, well, we're gonna raise a little bit more, and then that's it for the year. And I think with that, we should also talk about how much the Fed is under at this point.
Oh, 100%. This is a disaster, and the policy of raising interest rates is not protecting the value of the U.S. dollar. It's not defending the U.S. dollar's hegemonic status of being that world's reserve currency. Just today or yesterday, The Guardian put out the world's poorest countries' debt interest payments rise 35%. So this is the emerging market, or the market that is trying to emerge. And we know that they're holding a lot of U.S. currency, a lot of U.S. Treasury as loans. And the World Bank chief economist said about 60% of the poorest countries already at high risk of debt in distress or are already in distress. And what these nations have had to do was pivot away from the U.S. dollar. So it's backfiring against the U.S. policy, monetary policy, fiscal policy. It's backfiring, and that U.S. dollar status is really on its last legs. You have leaders this week out of Saudi Arabia and China meeting this week. The world, it's very much worth watching to see, and we're seeing the results today because they're discussing things like paying for oil in yuan instead of U.S. dollars. And we know the top oil supplier, China's top oil supplier, is Saudi Arabia. And who is importing the most oil is China. So massive moves away from the U.S. dollar. And there is a reason why central banks are buying gold. They know what's going on. And we ought to know the same, and exactly what happened with the Bank of Canada last week, showing a historic third quarter loss of about $500 million. That prompted a Canadian to contact us and said that was it. That was the last straw. This is, you judge the tree by the fruit, and we're all interconnected with the Central Bank of Canada, all the regionals, and she's I want to get the money out of the banking system. I want to get the money away from the Bank of Canada system. And this is one surefire way of doing this and protecting your wealth in physical gold and silver with Guildhall.
The number 18778 silver and the website guildhallwealth.com. Yeah, I think, Jerry, this also, again, we should definitely talk more about what's happening in the U.S. with the Fed there, because as you've mentioned and followed the story about that raising interest rates would be detrimental to them. Well, now that's bearing its fruit as well, because they are under by over $1 trillion. That's right. They've lost over $1 trillion this year. And essentially some analysts are saying that makes them bankrupt. They're insolvent. So what happens next? They've raised rates. They've hurt other countries around the world. What do they do now?
They'll have to do something very drastic. Something dramatic has to happen. They have run out of options. We've talked about the two options that they've had is either, inflate the dollar away into oblivion or raise interest rates. But you mention all the time the debts don't matter until they matter, and they are definitely starting to matter. We don't know how this is going to play out, but the world is shifting. And as you mentioned at the top of the show, Zoltan Pozsar, he talks a lot about how Bretton Woods 3, where commodities will dictate the new world order, and this is what we're seeing, a shift towards hard assets, and that is the Real Money Show's purpose, is to talk about what money is, what money is not, and why gold and silver will be money for 1,000 more years to come on the Real Money Show. Welcome back to the Real Money Show, the number 18778 silver, the website guildhallwealth.com. Jeremy, that was a great first segment wrap up, talking about the price analysis of silver and gold, how they've performed during the week, the Bank of Canada, lots of stuff going on, but we're going to get into the debt issue in the United States and beyond. Jeremy, what's going on with this U.S. Fed debt?
Well, they've, again, as that's a story that you've been following, that as they raise interest rates, they're going to end up with losses on their books, and they've already tallied over $1 trillion in losses. So what happens when the central bank that's covering for all of the other banks is all of a sudden insolvent? I mean, I know in Monopoly, when the banker goes bankrupt, they can just use additional pieces of paper. But at some point, someone's going to come calling and say, you owe us. And what are you going to pay when you don't have it? So I think they're going to try to keep doing what they're doing, keep trying to, extend and pretend. And I think that you're also going to continue to see a whole bunch of money laundering. You sent me something in the States, another bailout bill for pension plans.
Yeah, that was today. That came out this week. Biden announced another $36 billion bailout for union pension plans. We talked about moral hazard last week, where these fund managers are just taking massive losses, but there is never any accountability. But at the end, as Wall Street Silver writes in their post, at the end it all gets added to the U.S. national debt and funded by Ponzi token U.S. dollars, recreated by the Fed and laundered to the U.S. Treasury via commercial banks. They're just sloshing money around. We see this with the overnight lending, the repo markets. The cracks are continuous. This is like a cracked windshield that just gets worse and worse, and we're driving at full speed. This windshield's going to break in, and we're going to feel the full force and vacuum of all of those derivatives and all of the debt. Something has to do to cover the debt, and a revaluation is something that is being discussed. And we're seeing pegging around the world, and we're seeing a talk of a potential peg for oil. This is massive stuff for the gold industry, and one that we try to educate our clients about is this is the time to convert out of paper, convert out of fiat paper currencies which have a finite lifespan. The Canadian dollar has pretty much lost all of its purchasing power since the very end. The Bank of Canada is in the red. The U.S. Federal Reserve is in the red. The Belgian bank just reported that they're in the red. However, there is a massive pivot with the BRIC nations, the Brazil, Russia, India, China. The solution that we see is massive because the trade continues, and we saw that they met today, this week in Saudi Arabia and China, and it was breaking news that China tells the Gulf nations to use the Shanghai Exchange for one energy deal. So this is a massive shift in the global economy. When oil can be priced in something other than US dollars, this is the shift. And this is the end of US dollar hegemony, Jeremy.
And not only, speaking of the BRICS, Egypt just joined the BRICS. There was a report out just this morning that they're joining the BRICS. And you were talking about basically, an economic collapse. As much as we don't want to see it, you're not the only one talking about it. Nouriel Roubini came out this week and was talking about that as well, that he expects another 2008-like collapse. Let's talk a little bit about oil, because this is an interesting thing. Oil prices have been down over the course of the year. It's been an election year. We know that the Biden administration has been using the strategic petroleum reserves to basically try to get the prices of oil down. But at some point, you run out of that supply and you have to replace that supply. And that's where we come to this article by Zoltan Pozsar, where he's basically saying that Russia could sell the oil back to the U.S. with gold at $60 per gram, and they've set it up to basically say, well, you can buy 2 barrels of oil for 2 grams of gold, and anything basically under a certain price would be beneficial to the states. Now, it's interesting. I'm not sure how all of this works with the sanctions and stuff, but given the fact that you just saw the headline this week with Brittany Griner, right? That the administration did a terrible deal with Russia. The first thing I would ask is, why are you making deals with Russia when you have made them enemy number one?
Right.
And what you've done is you gave them what do they dub the guy? Merchant of Death.
That's right.
Right.
That was his name, literally.
Yeah, and so and leaving a Marine there at the same time. So you kind of say, none of this is really making sense, right? They're obviously making deals with Russia, bad deals with Russia, during a time when they're putting all these sanctions on Russia. Mm-hmm. So I'm curious to what this is going to play out and where we're going to see the money down the road. Mm-hmm. I'm saying we haven't seen the end of this and where the money went, because I bet you, looking at the way Obama did it with Iran and the nuclear deals, I bet there's going to be pallets of money sent to Russia somehow. And, this probably could signal a winding down of what we're seeing in Ukraine, just because it just doesn't make sense that they would do something like this. But it opens the door to the possibility of buying oil from Russia, doesn't it? I mean, if they can make a deal like this, they can make a deal to buy oil from them. And what Zoltan is saying essentially is there would be a spread of gold moving up to $3,600, where the U.S. could buy oil and buy it profitably, even as gold rises to $3,600. And what's in it for Russia? They raise the value of their book because they hold a lot of gold.
Right.
What were your thoughts when you saw this headline?
It makes a lot of sense, because earlier in the week, Russia signed a deal with India to sell oil for $30 discount US a barrel, plus a half a gram of gold, honoring the price cap. So that was the peg here. We saw the $60 barrel plus a gram of gold. It's absolutely genius. And this is what Zoltan says in this article. You're bringing back gold as a settlement medium and increase its intrinsic value sharply. Obviously, he says that it's going to run a risk of liquidity shortfalls for banks that are hyperactive in the paper gold market schemes, as all the banks active in commodities tend to be long the over-the-counter derivative receivables hedged with futures. So this is coupled in what we're seeing, the drainage out of North America, heading eastbound, fast forwarding into the vaults in India, in Russia, in China. China was that mystery buyer of 36 tons over the course of this year. The shift is huge, and this pegging of oil now, a barrel at 60, which is the cap that Putin is threatening. He was threatening today, actually, that the oil prices will skyrocket and hit those who propose price caps. But he has a method. There is a method of continuing to trade. Okay, we'll honor the price cap of 60, but guess what? You owe us 60 plus a gram for every barrel. And he's just literally pegged. The U.S. dollar effectively gets pegged and revalued versus Russian oil is what this is doing. So this is a massive, amazing game of chess that we're seeing. That he who has the gold's really making the rules, Jeremy. This is seeing it play out real time in front of us. It's amazing.
The number 18778-SILVER and the website guildhallwealth.com. Yeah, there's been some interesting things happening in the market as well this year. As it seemed like the price, when you look at it overall, you had some big moves at the beginning of the year. You had some crazy lows through late spring, early summer, and then there's been this slow creep up to where we are today, where I heard that TD had to essentially tap out of a short position. Their 15% got hit, and they had to get out of the market because they were shorting the market. And, Ted Butler, who's a long-time analyst in the market about the manipulation in precious metals, essentially saying that there are four big major players that short the market using paper to keep the price as low as possible. Mm-hmm. And he points out the fact that this has been a strange year for that, because as you've had the price, essentially flat on the year, it's in positive territory in most currencies, but flat in terms of U.S. dollars. You have this massive draining off the COMEX, and you have investors moving out of ETFs. And, this is something, Jerry, that we were ahead on the curve of. Back in 2016, when we started the registered accounts, where we help clients put physical product into their registered accounts, when we were in talks with Questrade, we said there is a trend towards physical. People want to know that they own it, that it's theirs, that they can go to the vault and personally touch their products. This is the trend. And we were bang on. We were right on that trend. That is what people are doing. And people are also realizing, not only during a time of inflation, it's about actual assets and not about investments. Mm-hmm. It's all about the ownership, and it's about making sure that you have access to your money. You have access to your assets. And so there's another part of that, which is when you're acquiring paper versions of precious metals, you're basically, pulling the steam valve on a pressure cooker.
Right.
You're diverting funds away from the physical. And as long as people can continue to accumulate the physical, you are going to put the stress on that market, which is essentially and eventually going to break. Now, if you're following people like Rafi Farber, who's a great analyst in the market, kind of a newcomer with a great cult following at this point, strongly convinced that at some point within the next year there will be a pivot, that printing money will be the name of the game, and it'll be off to the races for the precious metals. So, it doesn't really matter if this theory of Zoltan's comes true. The fact is it's almost baked in the cake that where are you going to run? Where are you going to hide? Where are you going to protect your wealth?
Right.
That's where gold and silver come in, and you can do it in the registered account. Right? You can buy actual physical product in your registered account, RSP, TFSA. You can do it outside the accounts, outside registered accounts. Take delivery. That's a great place to start. If you've never done this before, start small. Crawl, walk, run. Just get a little bit in your hand, see what that feels like and looks like. Understand it. It's new to a lot of people, but it's the oldest game in town. Right? Actual physical assets. But Jerry, what do you make of this? In a recession, in a time of high inflation, whether or not they try to beat this inflation down, which, by the way, I don't think they will. I listened to this interview this week with Jeffrey Tucker, and I like him. He's like this erudite guy, very smart, but kind of misses the mark on certain things. He thinks, the Fed is going to raise interest rates, and they'll eventually the inflation will come down. Well, if you're not raising rates past where inflation is, and if you're lying about those numbers, it's not going to happen.
No,
and
especially if you're lying about the numbers, right?
Yeah, and all of these numbers keep coming out. And, I don't know how many people are finding out about, the Auditor General and all the missing money in Canada and all of the missing money. What about the FTX scandal? Making all of these, all of these packages to send over to Ukraine. They put all the money into FTX, and then FTX just donates a whole bunch of money to establishment Republicans and Democrats for their campaigns. I mean, that's just an amazing laundering thing. And I actually found out this week, by the way, that Bankman-Fried's brother ran a COVID research institute, and all of those papers about ivermectin were sponsored by his brother's company.
Well, there you go.
I mean, how about that?
Not surprised.
This is nuts, but we're all finding out about it. Everyone's going to find out about it. What people really need to understand, the question, what's the value of the Canadian dollar? What's it worth? No. To say it's 1.33 against the U.S. dollar doesn't mean anything. What does that mean? Oh, well, okay, what's the U.S. dollar worth? Can't answer that. Oh, well, it's relative to the other currencies. Okay, so you've got two boats tied to each other, no idea where they are. That's not value. But you can value things with gold. You can say, okay, how much should a house in Toronto cost in gold? Well, I'll tell you something. It shouldn't cost you 660 ounces, right? That's a remarkable amount of kilos. It shouldn't cost 650. In 1980, at the peak of the gold market, you could buy a house in Rosedale, a high-end neighborhood in Toronto, for 175 ounces of gold.
Wow.
Today it would be thousands. It would be thousands. And of course, the ratio of gold to silver went 16-1. We know today that they're mining it at probably more like 8-1. So I think that people are starting to learn the story about gold and silver. I think they know that the right way to do this is to actually own it and let everything play out. But protect yourself. Have that physical product.
Absolutely, Jeremy. I couldn't say it better. I mean, you wrapped that segment up quite nicely. Everyone, you're tuned into the Real Money Show, AM 640, the number 18778 Silver. We'll be right back. Remember, you can tune into our podcasts, which are now available on Spotify. We're there on YouTube, also Rumble. But you can always check us out at guildhallwealth.com. Jeremy, that segment was awesome. I'd like to just rattle off a few of the headlines that amazing Twitter feed, Telegram feed, Gold Telegraph, highly suggested. Just some headlines that are really rattling the news headlines this week. First one that caught my attention was BlackRock says to get ready for a recession unlike any other. The world's biggest asset manager said this. And in January, they said the Western world was infatuated with digital rocks as China was stockpiling gold. But you got to look throughout history how gold has performed during recessions and stagflations. You mentioned 1980s. You just needed 175 ounces, Jeremy, to buy a house. Question is, how did gold perform and silver perform during the 70s and 80s, where we did see stagflation, high inflation, low growth? Gold went up 8-fold, silver went up 11-fold. And this is the reason why I constantly say this market is very cyclical. You know, we have the silver to gold ratio, the silver to real estate ratio, the gold to Dow ratio. All of these ratios are cyclical. When we see stagflation like we did see back in the 70s and 80s, it'll be much worse because the numbers are a lot worse. Inflation is much higher. The debts are much higher. The performance in gold and silver will not just protect your wealth, but you're going to profit like you've never seen. And another headline, the Bank of International Settlements, Jeremy. It's now warning. Here's the headline from Reuters. The BIS, the Bank of International Settlements, which is, just as a reminder, the central bank above all central banks. They're now warning of $80 trillion of hidden FX swap debt that the pension funds and other non-bank financial firms now have hidden away somewhere. So these pension funds, no wonder why they're getting bailed out. But this is $80 trillion worth of hidden, sloshed money, of hidden off the balance sheet debt in the form of FX swaps. You are hearing that correctly. 80 trillion on the bank's balance sheets. The Bank of International Settlements is now sending a clear warning. And the warning is really to stay away from this type of system, to not participate in the type of bank, the digital banking, the fiat currency system that we're moving away from. Jeremy, your thoughts on these two headlines?
Yeah, I think that, it's all about de-digitizing your wealth, as you said. Mm-hmm. How do you not participate? How do you get out of the way? How do you protect yourself? Get out of the system in some capacity. If you put 10-15% in physical precious metals, which are so incredibly undervalued today, when you look at $300+ trillion in debt globally, not including unfunded liabilities, not including the type that Telegraph pointed out of missing money off books. It's going to be a massive, massive, hard awakening. Just look at what happened with FTX. People had no idea. For me personally, I don't want to disparage people doing, with crypto, but I knew something was up when you started seeing the ads on all of the, in sports and stuff like that. I was like, oh, something's happening soon. You kind of sense that. But then the other part of it is the fact that this guy being the fall guy, right? Mm-hmm. It's smacked. Do you remember MF Global?
I do.
So MF Global, John Corzine, who was a total deep stater, right? Basically, J.P. Morgan put a gun to the guy's head and said, "You owe us money." He went into the accounts, took the money, totally illegal. J.P. Morgan got their money. This guy got a little ride off into the sunset, and nothing happened. Right now, they're saying the Department of Justice is going to investigate Bankman. I doubt it. I mean, who's in control of it? It's like Comey investigating Hillary Clinton. He's on the books. So right. This type of stuff is so irritating, but you want to be out of the way. Mm-hmm. You don't even know. Look at a guy like Michael Saylor, buddy. You're supposed to be a super smart hedge fund guy. You didn't see this coming? You didn't do enough research into this? You just, like at the altar of technology, you sat down and prayed and said, this is the direction. I mean, the good thing is this clears out all the crap, right?
Yeah.
Only the purists are going to survive, and that's a good thing. And maybe that becomes maybe that becomes an alternative down the road. It's funny. There was, I saw something on silver, Wall Street Silver, that payments, there's like a payment system. I can't think of the name of it. They're up like massively this year.
Right.
They're also run by PayPal, so that's kind of curious. People probably don't know that, but it's up, which is basically to say, look, people are going to find alternatives. So whether it's digital central bank currencies that they're going to try, they'll probably try and not work. No one's going to adopt it. Everyone can go to cash. They can go to metals. They can go to crypto. They can do all sorts of things. And you've missed your credibility. And I think as well, when it comes to all this financial stuff, it's about narrative control. They just want narrative control. The Fed just wants to make it look like they're in control. Mm-hmm. But you're not. You're not in control. You never were. Oh, so So I was talking about that interview with Jeffrey Tucker. He's a writer,
Right.
and I like him. I read articles. I was thinking of bringing an article of his to the show a few weeks ago. It never came up during the show. And he, in this interview, he said that Jerome Powell basically hated Bernanke's policies. And it's like, well, wait a minute. If that was the case, then why didn't you raise interest rates?
Why didn't you raise
the minute you got in? You could have gone a quarter point here and there, a quarter point here and there. Instead, you tried. The market had a complete breakdown. You reversed course, and then you didn't do it until your hand was forced. This is going to be pandemonium in the markets, and we just got to be out of the way.
100%. The number 18778 Silver, the website guildhallwealth.com. You're listening to The Real Money Show, and we'll be right back. Welcome back to The Real Money Show. The number 18778 Silver, the website guildhallwealth.com. Jeremy, what is going on in the world of pink diamonds?
Essentially, from 2018-19, you had a market that was basically just interested in digital NFTs. The Facebook and Googles were going crazy. The everything bubble was raging, and it was sort of like, well, if you can't get me a return every quarter and it's double digits, then I'm not interested. And so they kind of fell out of favor, I'd say, for a couple of years there. And then you had COVID for a couple of years. So, that market kind of shut down, and, because it's a handshake market and jewelry stores were closed. And then as things opened back up again, the recession talk has started, and inflation talk is obviously with us, and people want real things. And this is a market that it's a long-term market, and it's a profitable market. It's been interesting to look at the performance over the last decade and say, if you were holding a diamond for 10 years, even with 4 years where nothing was happening, these diamonds are still profitable. In most cases, I mean, it's a subjective market. They're not all the same, but this is a place where you can put wealth into for a very long time, and it will be there, and it will grow. So I'm very excited about it. I've seen some numbers coming out of diamond companies around the world, and in pink argyles, the numbers that are going out have been stunning. I'm not sure what to make of it quite yet. I'm going to be a little conservative. I'm going to kind of pause and wait to see what's going on with those numbers. But definitely the auctions are starting to pick up again in the diamonds. So it's pretty exciting. How about you? What do you think?
I was looking at so we know the Argyle mine closed in 2020, and as a result, the marketing push from Argyle and Rio Tinto has just been phenomenal up until that point, but it continues. We're seeing that Rio Tinto is continuing to manage the Argyle brand rather than sell it off, which comes as a very welcome development. Rio Tinto's plan to implement a few services coming up, which is indicative of a very strong market going forward. They're looking at a certification service. They're looking at creating a trading platform for certified Argyle pink diamonds, which is massive. You do need that trading platform coupled in with the Fancy Color Research Foundation, perhaps, and actually a Beyond Rare tender platform. So this is amazing developments we're seeing coming just overall, knowing that this is inflation protection and diversification. People want physical, tangible assets like gold, silver, and a natural fancy color diamond like a pink, and are also desirable because as they can be stored outside of the financial system. And this is one reason to consider a natural fancy color diamond from Guildhall Wealth. Jeremy, your thoughts on those developments?
Well, it's great. especially since you know that within a generation or two, there will be no more mining. It's going to be all secondary market. That's going to be huge for the market as well. No more first premier markets, right? That's what happened with Argyle. That's it. Right now, the only Argyles that are out there are secondary market. So that changes things in the marketplace. So I think, look, this is all about ownership of assets when things are going to be topsy-turvy, as it were. And I think that it's definitely something to consider for diversification's sake. A lot of people will look at gold and silver. They can, they want to own more than the 15%. That's fine. It's kind of the sleep at night rule. If the markets are keeping you up at night, maybe you have too much in the market. If gold is keeping you up at night, maybe you've got too much in gold. But definitely something to consider for a diversification.
100%, Jeremy. And the motto here at Guildhall Wealth is if you cannot hold it, you do not own it. And the time for owning real assets is here. Thank you, everyone, for listening and tuning into this episode of The Real Money Show. Thank you for tuning in to The Real Money Show on AM 640 Toronto.